Good morning. Our lecture today is about Egyptian tax system. Our lecture is going to be divided into two main parts. The first part we are going to talk about the Egyptian tax system, and then we are going to talk about the tax reforms in this tax system. What is the structure of the Egyptian tax system? The main source of income for the Egyptian government is direct and indirect taxes. Direct taxes include property tax and income tax. Property tax is divided into agricultural land tax and building tax. While in case of indirect tax includes stamp duties, general sales tax, and the customs duty. What are the main reasons for reforms in any country, generally and especially in Egypt? There are four main reasons. Number one, little tax revenue. Before 2005, tax revenue was very low compared to any other country in the world. Number two, tax structural imperfection. Usually, countries depend mainly on direct taxes as a main source of income, not the indirect tax. But in Egypt, just like many other developing countries, the indirect taxes revenue are much more higher than direct taxes. Number three, complex tax law. The Egyptian tax system before 2005 was very old and there isn't any modification was made for this law since 1960s. And finally, number four, justice. Usually, countries use taxes in order to achieve justice, in order to distribute income between people in a more equitable way. But actually, the Egyptian tax system is very far from this target. As a result, in 2005, the government thought about a tax reform agenda. What are the main principles included in this agenda? Number one, enhancing self commitment. The government would like to persuade people that their duty is to pay taxes. They have to do this by themselves without any obligation, without any penalty to do so. Okay. Number 2, simplifying tax law. As the tax law was very complicated, the government would like to make it much more easier just to convince people to pay taxes by themselves. So instead of paying different types of taxes for different types of income, now you can collect all your income after deduction of cost, and taxes are going to be imposed at one rate and one time. Just instead of relying on flat tax rate, the government should rely on progressive tax rate. So here we have to change tax rate from flat to progressive. Number 4, computerized tax system. The Egyptian government is going to collect all information about the taxpayers and establish one database for these taxpayers. This will help to prevent tax evasion and at the same time increase tax revenue or expect the tax revenue that will be collected in the future. Number 5, open a new era between a tax administration and taxpayer. This means that all open cases before 2005 will close, will dispute and dismiss. So we are going to start a new era starting from this time period. Number 6, reduce tax rate and widen tax burden. Tax base, widen tax base, so that we can maximize tax revenue. Finally, point number 7, unifying tax administration. Instead of dealing with 4 different tax administrations, we are the 4 different tax administrations will be collected under the umbrella of one administration, which is known as Egyptian Tax Administration. This will help to reduce transaction cost and increase efficiency of raising funds or raising tax revenue. So these are the 7 main priorities or points under the reform agenda of 2005. So the main goals of Egypt's tax reform: number 1, increase tax revenue. Number 2, make tax administration more transparent and fair. And finally, number 3, improve economic performance. Okay, let's start with the tax and tax reforms. Number 1, income tax rate. Here we are going to start with explain what was the tax rate before 2005 and what are the tax reforms for this tax rate later on and why. In case of income tax rate, it is the most important source of tax revenue for any government. It's divided into two main parts: individual income tax and corporate profit tax. In case of individual income tax, it's tax on salaries and wages, um, real wealth revenue, business revenue, non-commercial business revenue. All of them are going to be unified together or collected together under one unified tax, which is known as single income tax return. The tax rate before 2005 was flat tax rate. If income up to 50,000, the tax rate is 20%. For any income more than 50,000, it's 32%. So flat tax rate means it doesn't matter whether your income is 1 Egyptian pound or 50,000 Egyptian pounds, you are going to pay 20% of this income. In 2004, the government would like to reduce tax rates in order to improve tax collection. As a result, we have shift from a flat tax rate to progressive tax rate, and as a result, income has been divided into tax brackets. Tax bracket number 1 from 0 to 5,000 and from 5,001 up to 20,000, from 20,001 up to 40,000, from 40,001 up to 10 million, and finally more than 10 million. The tax rate for the first bracket is exempted. They have to pay no taxes. And then 10%, 15%, 20%, and finally 25%. But in 2013, the government would like to modify the tax bracket without any change in the tax rate. So the tax brackets, the first one, there's no change in the first bracket, but the second bracket will increase from 5,001 to 20 to 30,000. And also the third one will increase the upper limit to 45,000. And with respect to the fourth one, it's from 45,001 up to 250,000 instead of 10 million. But the tax rates was the same, exempted 10, 15, 20, and 25. Another modification has been made in 2016, also with respect to tax bracket without any change in the tax rate. The exempt income increased from 5,000 to 6,500. And with respect to the fourth bracket, the upper limit decreased from 2050 to 2000, from 2050 to 200,000. And finally, the last bracket decreased from 2000, more than 2050 to more than 2100. 200,000. While the tax rates remain the same. Another modification has been made in 2018 as the exempted income increased from 6,500 to 2,000 to 8,000, and the upper limit, sorry, and the lower limit of the second bracket is 8,001 up to 30,000 without any modification till we reach more than 200,000. Another modification has been made in the tax bracket, sorry, the tax rates in this case, as this is exempted 10, 15, 20, and the last one decreased from 25 to 22.5%. These are the main reforms that has been made in individual income taxes. What about corporate profit tax? It's applied to limited liability companies, joint stock companies, limited partnerships, public sector banks, public sector corporations, foreign banks, foreign corporations and their subsidiaries, public economic authorities. Its tax base is determined as the net accounting profit of the company. In case of corporate profit tax, there are a number of tax exemptions that has been made by the Egyptian authority. Number one, exemption for 5 years, tax exemption for 5 years for new established industries, industrial corporations with number of workers more than 50 workers. And also there is a 5 to 20 year tax holiday for a business established on a location, a specific location. Okay, say for example 6th of October. Here we are going to talk about the original tax rate and any exceptions or others. In 1981, the original tax rate was 32% over the period from 1981 to 1982, and then the tax rate is going to increase to 40% starting from 1983 up to 1993. Except for petroleum mining companies, and for Suez Canal revenue. Sorry, and for industrial companies. In case of petroleum mining, it's 40.55%. And with respect to industrial companies, it is 32%. In 2005, the tax rate decreased, the original tax rate decreased to 20%. So instead of 40, it's gonna be 20%. Except for petroleum mining and the production, it's 40.55%. And the Suez Canal Authority and Central Bank, it's 40%. In 2013, the government decided to increase tax rate from 20 to 25%, while there isn't any modification for petroleum mining and Suez Canal revenue. It's 40.55% and 40%. Also in 2015, the government decided to decrease tax rate from 25 to 22.5%, except for Suez Canal revenue and petroleum mining, it's 40.55 and 40%. What about property tax rate? As we said, property taxes include agriculture land tax and building tax. The tax base in both cases is determined by the rental value of the land or building. The rental value is going to be determined by the tax authority. Every specific number of years, tax authority is going to review the rental value of the building or the land. In case of agriculture land, the tax rate is 14% of the rental value, of the land rental value. While in case of building, we have to differentiate between two different laws. In 1954 and in 2008. In 1954, the tax rate is applied to properties within city boundaries. While in 2008, all properties in the country. Tax rate in 1954, it was from 10 to 40%, while in 2008, it's 10%. The rental value will be reviewed each 10 years, while in 2005, each 5 years. Deductions for remittances or maintenance. Reduction for maintenance is 20% in according to law in year 1954, and 30% for residential properties and 32% for non-residential in law 2008. What about the indirect taxes? As we said that there are three different types of taxes. Consumption tax, stamp duties, and custom duties. Mainly, we are going to talk about the consumption tax only. There are two main laws related to consumption tax or taxes in consumption. Number one in 1991. It is known as sales tax, and it's imposed on the sale of goods or rendering a services. The tax rate or the general sales tax rate is 10% in case of goods, taxable goods, and 5% in case of taxable services. In 2016, the government would like to change sales tax to value added tax. Value added tax is a tax levied on each stage of production. And the tax rate in case of value added tax is 14% for most goods and services except for manufacturing and equipment used in production, it's 5%, and if products are going to be exported abroad, it is 0%. What are the main advantages of using value added tax instead of sales tax? Number one, overcoming tax evasion. If tax is evaded at any phase, the transaction gets noticed in the following production stage. Number two, controlling the informal sector. As collecting tax during different stages of production enabled the government to collect taxes on goods and services provided by small-scale suppliers. This is the end of our lecture today. Thank you and see you next week.